fond memories of New York City?
Oh, it's a famous time. It's really cold though. It's very
Oh,
cold here
really?
today.
Okay. Yeah, well, it's cold and foggy here in Silicon Valley, too. It's not always perfect here. So, Melissa Arno is the founder and owner of an international education company where she teaches people how to successfully trade the stock market. The message she teaches is uh, her own and created with the unique Stock Swoosh LLC. The method is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. Um, she also is the executive producer and creator of her own television show, which is titled Make a Million with Melissa. Oh, I like the sound of that. Make a Million with Melissa, and what to do and how to do it is a television show on stock trading. I appear on TV as an expert stock market analyst discussing the market, stocks, news, and world events on Fox News, Fox Business Network, RT America, Cheddar TV, and CBS News. And I used to work for CBS back when Walter Cronkite was our um, lead broadcaster,
Wow,
and
that
he
was a
it
long time ago.
was a very long time ago. Walter Cronkite was a very nice guy. He was one of the last of the World War II correspondents who was still working and was very good friends with Edgar R. Murrow, who was a legend in the
Yeah,
industry at the time.
yeah.
And Walter was quite the drinker, as I remember. I used to see him whenever he came through Tokyo.
Everybody
So
drank and smoked back then. That was before they knew
everybody,
smoking
it was
killed you.
required.
Yeah, yeah.
Absolutely. And fight. Don't forget the fighting. So anyway, you have until 5 minutes before the hour when we hand out our next batch of prizes for the day.
Well, thank you. What a nice introduction. Welcome, everyone. Again, as John said, my name is Melissa Armo, and I own my own company called the Stock Swoosh. And I started trading, I can't even believe it, but in 2008, and it's almost 2026 in less than a month. Today's December 3rd. This year has flown by. And again, if you would have told me that in January we would have had the massive sell off with tariffs and then the massive rally with the tariff pause, I would have said, really? Because we started out the year relatively quiet. So who knows what 2026 will bring? Could bring a lot of volatility. Again, volatility can be your friend if you know how to trade it. And again, so I'm going to talk to you today about trading on the side of institutional money for success. Obviously, we all want to be successful. The reason we trade is to make money. If you have questions after today, you can email me at melissathestockswoosh.com or you can call me at 929-3200-GAP. This was the top gap today. It was a short. We did Netflix. We did puts in Netflix. And again, I do options and I do day trades. Okay, so just to go over here, what is a gap? The stock closed here yesterday at 4 o'clock at one price and then opened this morning at 9:30 down. So this is a gap, and this happens to be a gap down today, and Netflix really tanked today. In fact, it dropped down to 102 and change, and this could even keep going. It can even keep going lower the rest of the day today. So it was a good short. And again, a put, if you do an option, a put is a short. So some people like to do margin trades. Some people like to do options for various reasons. I like to do both. I like to do the fast, quick trades for day trades. And when I'm doing options, I'm doing the weekly options, which we'll talk about as well. But like I said, it's time to get ready for 2026 and get out of a rut. If you've been in this, kind of mode, relaxed mode, where you're buying every dip in the market, it's not working actually the last several weeks, and it's not going to continue to work the rest of the calendar year. So it's one of these things where maybe you're doing something that works for a period of time and then it stops, but then you don't realize it and you keep doing it, you keep doing it, you keep doing it, and you can't seem to get out of the rut and you're losing, but you keep doing it because it used to work, or it did work 2 months ago or 3 months ago or whatever. You have to get to the point and realize when something doesn't work, because you don't want to keep losing. And I think that is a challenge for a lot of traders. Started in October, all in November, and even now we're only 3 days into December, but we have a Fed meeting next week. Fed meeting next week, which is extremely important. And every single data point that comes out, again, as John said, I talk on television, talk about the economy on television. Everyone's wondering what's the Fed going to do next week. The point is, though, that we're going to see volatility, okay? And that means that you could have a lot of opportunity to make money if you know how to trade it. And the Fed has a tough job next week based on some economic numbers came out this morning. And every economic data point between now and next Wednesday will be scrutinized. We'll have a reaction with the market because people are trying to predict what Powell's going to do. So what do? Like I said, I do gaps, but I'm mostly short, which again may seem interesting because like, well, wait a minute, how can you make money shorting if the market's bullish? You can make money shorting if the market's in an uptrend. You can make money shorting if the market's in a downtrend, okay? So really, my strategy is based on common sense. If you're here, you're probably here because you want to make money trading, okay? And the fact is you have to make money trading on a regular basis if you want to trade for a career or as your full-time income, even though it's really only part-time hours. And you've got to follow some kind of common sense. So when you think about it, when I make a decision to do something, I'm going with the momentum. And just, again, this is common sense. I'm following the moves that institutional money make in the market. And then I'm capturing those moves in a small time frame in a small period of time daily. Again, Netflix is a good example because this is a current gap today. And what happened with that stock today, it got dumped. Okay, with the reasons, you could say this reason, that reason, the market, whatever, but it fell, okay? So the momentum in Netflix was to the downside. So I use one system and one system only to make my trading decisions. And I coined the term to call my system the golden gap because it's like finding gold in the market. When you find a gap, again, I'm using Netflix as an example because it's a current trade, where you have the opportunity to trade the momentum and take it in the direction of the gap. Now, this was another one that we did a really good one here. This was back the beginning of, the end of October. Actually, this started falling. So again, this is BA, okay? BA closed here, gap down, fell. So BA opened here around 222. Again, I'm going back to, this is before Halloween, okay? And it fell $10. Then it closed here, then it gapped down, fell again, okay, this is approximately 209, fell again down to 200, fell $9 plus. So again, who is in control here, whether you did 2 days or 1 day of the BA, whether you did the 29th or the 30th, the bears were in control. So again, this is momentum to the downside. A big fat red bar is selling, okay, and you have people short, like we were short that. So we did the 210 puts. The Wednesday, the 29th, the day that we had that first gap, I did the 210 puts. I'm going to go back. It expired the 7th. So here was the day. Again, this closed here, gap down, so we bought puts. And again, so to enter a put or a call, I'm buying it to enter. I'm selling it to exit. Okay? So this is a good trade. It fell. And here was the trade. Cost was $275, which is relatively cheap. Again, a lot of people like to do options because they're like, well, if I short BA at $210 a share or $220 a share, wherever you get in it, you have to do it on margin. That's true. There's pros and cons to doing options versus margin trades. I get it. You can open up an options account as a cash account without margin, all right, which a lot of people do. But this was really actually very cheap for the price of this. $275 was the cost for one. You could have bought one. You could have spent $275 and it was a 410% return on investment. So with an advanced trader risk, again, I'm trading since 2008, a long time. Sold at 14, made $39,395. Now, if you took a smaller risk, if you risked 5 contracts or $13.75, you could have made $56.25. That is a huge amount of money for that risk. Again, that is entering the trade here. Go back. Excuse me, on the day that I called it. And then getting the drop. So again, you would have bought the put here and you would have got it down. Now, I'm going to point this out though too. Excuse me, I'm coughing. I'll take some water. And any questions, let me know. I didn't stay in that till the last day. I don't typically, okay, stay until the last day, especially if I'm up that kind of money. But in this case here, I would have made more actually. because the last day, the 7th, was a Friday. We came all the way down to 190 something. So this was, again, a very profitable trade. At any point in time, though, you could have got out with money, you could have retaken it, or you could have done multiple strikes. So what is happening there, or what was happening there with the BA, was it was falling, okay? So it was a short, I put as a short, and it was being sold off and dumped by institutional money, okay? And any questions, let me know. I don't know if I have the questions, up or not, Kate. Anyways, getting back to what I was saying, opportunity arrives in many shapes and forms. It can be because of earnings. It can be news related. It can be something like with tariffs. It can be economic data. It can be the Fed. For me, the reasons that I take a trade vary for all of the things I just said, but I'm always looking for the gap itself. And when I see the gap, I'm trying to determine, okay, is this gap going to continue in the direction of the gap? Is it a long? Is it a short? Okay, is it going to flip? And then I'm trying to decide, is it going to have a big move? Because again, if you're taking a trade and you want to take, I don't care if it's a small size or a big size, one contract or 100 shares or 1,000 shares, the best chance of opportunity for you to make a lot of money is not necessarily increasing your risk, but increasing your momentum in the trade where you get a larger move. That way, even if you have only one contract or 5 contracts, if you get a big move, you can get a higher potential return on investment with a small risk. And then it's really up to you if you hold the trade or you get out of it. Again, you could get the first drop in a short, get out of half, hold the rest. I typically do not do that, but you could, okay? Now, as I was saying, I also do day trades. These are trades on margin. I'm going to show you here 1 week of results in the trading room. This was in November. My average risk is about $4,500 a trade. And again, these are margin trades. We're going to go over each of these for an average week. This was during earnings season. 42,740. We did Qs, BA, Amazon, Nvidia, no trades on the 12th, and then the 13th we did Nvidia. Again, these are trades I call live in the room. I call the entry, the stop, the exit, live in the room. So 11.7, again, I prefer to short, okay? But sometimes we go long, but I do prefer to short. Here was the Qs. Closed here, gap down. So this was a gap down. Actually, we had a gap down in the market today. Actually, let me see if I can bring it up. Can you see my charts here without me resetting it? Let me know. We had a gap down in the market today. Now, I was just talking about a month ago, but here's today's gap. The market closed yesterday at 622. Gap down here, it opened at 620.66 today. Does everyone see that? So there's a daily chart. There's a QQQs, and we gap down. I hope everyone can see it. I don't know. I can't see any chats. Kate, do I have the chat? Is the chat on?
Yeah, you should have the option. It might be at the bottom.
Oh, there, I see it. Tina said yes, she can see it. Okay, perfect. Thank you. Anyways, this is a gap today in the market too. Okay. Anyways, long story short, we were talking about uptrends, downtrends, the market. I think the market's lower. Okay. I'm probably an anomaly here saying that. I do not think that we hold here. Whether we sell off today, whether we sell off tomorrow, whether we sell off next Wednesday after the Fed meeting, whatever, I think we are lower, like in the short term. Again, I'm a short-term trader. I'm doing weekly options, or I'm doing day trades. But yes, the market's strong. Yes, it's in an uptrend. Yes, we're not that far off the highs. I get it. But I think the market's lower, And again, I'm basing that on my gap analysis. So I'm going to go back over here. Okay, so this was the 7th. So you say, well, this is green. Yes, it closed green, but it gapped down. Okay, so there's a short here. This tailing thing is selling. So we entered at 607.05. I did this as a margin trade. You could have bought a put there's daily expirations if you want to do it. Exit was $599.25. Profit was $21,840. Now, I get the market's expensive. It's expensive today. It was expensive last month. But again, you could buy a put. And if you want to day trade the market, you could buy a daily expiration. You could buy a put today that expires today. Now, I don't do the daily puts. I'm doing the Fridays. But this is a big move. And my point here is this is a big move to the downside that happened with momentum, that this was the tail. We traded the tail. And it came down basically almost $7, almost $8. I mean, $7 and change. So I get in, get out, done, boom. And you could have bought a put. So it depends what type of account you have, but I like doing day trades. Then we did BA as well on the 7th. BA has been our favorite here in the last month of November. Closed here, gap down, fell again. We traded the tail. Okay, this was the same day. 87.75. Nice trade here. Nice move into BA. Again, this was a day trade, but you could have bought a put. Then we did Amazon, which was on the 11th. This was actually a gap up. Okay, I'm sorry, on the 10th. We actually went long this. Closed here, gapped up. We played the rally, got in, got out. Again, this is not really rallying today much. Tesla, if you wanted to go long anything today, we didn't do it, but Tesla was moving higher today. Now, I wouldn't do it here with the market falling, but Tesla had a gap up today. And Tesla rallied today if you wanted to go long. But this was a long. Got in here at 249.30, got out at 250. Again, I'm usually looking for a dollar. A dollar or more, out, done, boom. Again, sometimes you have much larger moves, but this was a nice risk to reward. Then on the 11th, so funny because this feels like so long ago where some of these prices are. Again, NVIDIA is nowhere near where this was. Look at this. This was 11.11. Let's look at NVIDIA. Let's just look at it right now. It was like 195-ish. It's at 180. It's nowhere near that. Again, people are like, oh, let's go long it. Let's go long it. No, this stock has been falling. It's been falling since a month ago when we shorted it, and it's falling today. Again, this is another sector that, you know, I talk about it on the TV because people love talking about this. They love talking about Oracle. They love talking about PLTR. This sector isn't doing well lately. If you're really watching it and you're really paying attention to it, it's been a short. It hasn't been a long, okay? Anyways, getting back to this here, we shorted it, got the drop, fell, okay? And again, this is a day trade, entered 194.50, again, got the drop, boom, dollar plus out, made 47.25. Again, this is a margin trade. You could have bought a put. We have been doing puts in that. And then 11.12, there were no trades because there were no good gaps. And then 11.13, we did NVIDIA again. Closed here, gap down. Look at this. Look at this. This was back the 13th. Again, today's December 3rd. The stock's down in here, snug as a bug. This is where the stock is trading today, right in here. Look. So we did this here. Okay, got a nice short. Again, 190.70 was the entry. Got out at 189.60. Again, a short. 4,400 out. Boom, done. And that's how you put together a week. So again, my risk is around 4,500 per trade. That's not the cost of the trade to do a margin. That is where I enter it, put the stop. It's how much I'm risking. You could risk $100. You could risk 500. You could do puts or you could have done calls. Okay, which I do too. But I'm holding trades longer when I'm doing an option, which I showed you for the example for the earlier one that we did. But again, people like to be in the room with me because I talk about the market. I give my market call direction, I give my market opinion, I give the gaps I like, and I'm calling the exact entry and stop. And some people need that. Some people need that in order for the reinforcement, for the mentorship. I'm not going to lie to you and say today was easy peasy, breezy, unless you did Netflix. Let's just quickly look at that. But, you know, this was easy peasy, breezy. But the market was not easy today because it dropped, sold off, flipped, then fell again. Like if you're in this long here, you're getting bashed around, like your head's getting bashed on a wall. And again, so many people are going long every dip in the market. It hasn't been working since October, and I don't think it works between now and the end of the year. Not that we don't have a Christmas rally. Everyone likes to talk about Christmas rally. Christmas is 3-4 weeks away. Christmas is nowhere soon, and we have a lot of economic data, and we have the Fed talking, like I said, next week. Actually, it's 1 week from today. Today's Wednesday. What's my approach to day trading or scalp trading? My approach to day trading is trading momentum, just like with options. I'm trading momentum. Scalping to me is risking 5,000 shares, taking 5,000 shares and risking maybe like $4,000, $4,500, and then getting out with $500 or $800. That's a scalp to me. That's not a momentum trade. A momentum trade is trying to get 1-to-1. I'm trying to get 1-to-1. If I'm risking 4,500, I'm trying to get 4,500. Whether that happens in $1 or $2 move depends on the difference between my entry and my stop. More expensive stocks will have bigger stops. But my approach to day trading is momentum trading, looking for the big move, not for a scalp. If I feel like I have to take a $5,000 risk to make $500, I personally do not think that's a good trade, and I probably wouldn't do it because I think it's too risky of a trade. Do you know what I'm saying? Because you would have to take, 5 trades to make then 1R, and the chances of you going 5 in a row in the morning like that are very low odds. So I typically do 1 trade a day, maybe 2. I mean, again, I just showed you the stats for 1 week, but if you go to my YouTube, I have the stats on there for the year to date. I think the last time, though, I had it up there was like a month ago, so I haven't updated it for the last 2 weeks since before the Thanksgiving holiday, but I'm usually doing 1 trade a day. And if you see on my stats, if I'm doing 3 trades a day, I'm probably having a bad morning. Like I probably took a trade, took a stop, took another trade, took a stop, and had to do another trade. That's not a good day for me. A good day for me is take it, get in, get out. Take it, get in, get out. And so that's why I developed this rating system where I'm trying to really do all the pre-work, figure it out, figure it out, figure it out. I get up early. If the more time I spend prepping to trade, the less time I spend in the trade and the more money I make. I know that sounds crazy because a lot of people don't even figure out or decide what they want to do until 10 o'clock or an hour after the open, but that's not me. I'm the opposite. I will get up and spend 2 hours getting ready, prepping, rating things, trying to figure it out. Again, the whole point of trading is to make money. And if you can be in and out quick in a trade, you don't have to worry about a Trump tweet or a White House press conference or the Fed. Do you know what I'm saying? And again, there's so many things that could affect you. And not all of them are good, quite frankly. Yeah, here's my website, but the YouTube is the stock swoosh. It's just go to YouTube and put in the stock swoosh. And actually I have a lot of videos of New York because we had the Macy's parade last week. I didn't even get to finish putting up all the parade videos. A lot of great videos of the parade last week because like I said, it's a fabulous time to be in New York this time of the year. But trading in the morning gives me the opportunity where I can go out and enjoy New York City. If I worked 60 hours a week, 50, 60 hours a week in commuting, I'd have a lot less time to enjoy New York. So whether you live in New York City or you live in some other city or you have a different life where you have kids and you have families and you have pets and you want to spend time doing other stuff, or maybe you're retired or semi-retired, the idea of working 8-10 hours a day, which I used to do. I did it. I'm telling you, I did it for 17 years and I had enough. And really what put the needle in the haystack for me was the whole point of the mortgage crisis, which happened 2007, 2008. I said, that's it, I'm done with this. And I wanted a new career. And then I found out about trading. But again, trading isn't something where you wake up in the morning and you're born and you make money in the market. No one is, no one does. Everyone goes through a cycle of taking various classes or trading on their own or trying to figure it out or jumping from trading rooms, trying to figure out ways to make money to find the next golden bullet. There is no magic bullet where you're going to wake up and you're going to make all this money in the world all of a sudden. It's just that's not reality. You have to learn something, then you have to get good at it, or you have to go through a series of finding different mentors and taking different classes and paying money for those classes until you find someone that you connect with to be your mentor and a system that you find out and say, wait a minute, this works. Because again, that is the process for everyone. For me, it was a little different. I ended up spending my own money in 3 years of my life figuring this out. I'm glad I don't have to repeat that time in my life. But now that I know what I know, I can use it in any market. And as crazy as it sounds that I'm shorting mostly in this market, it's actually easier to short than it is to go long, even if the market's up. I don't know if that makes any sense, but trust me when I say it's true. And when the market is down or falling, okay, like let's just say we tank today. Let's just say we do. Let's say we fall the rest of the day and close it red. It's going to be very hard to go long anything, actually. Even Tesla, which was rallying this morning, will stall, okay? You lived in South Orange, New Jersey, used to go to the city daily, stuck in the Midwest because of parents, you miss it so much. Yeah, well, the city has changed, Paula. I don't know the last time you heard. The city has changed a lot, and everyone's worked up about the new mayor, how it's going to change 2026. But I will say, I lived through COVID in New York. I've lived here almost 20 years. And the fact is that New York somehow always seems to survive. The good times, the bad times, New York is a vibrant city that survives the topsy-turvy things that happen around here. But the city's changed a lot, that's for sure. But I love New York. I love New York, and really, if you've never been to New York at Christmas time, I'd say the week before Thanksgiving till the end of the year, till New Year's Eve, I'd say is the best time to visit New York City if you've never been here. Anyways, getting back to what I was saying. Oh, let's look at the market quick. I was talking about the market. I was saying, okay, again, volatility comes in, and what happens is people get very scared when they see volatility, and I'm just going to make up a scenario here for you. We were green this morning. We opened at 9:30. It's like almost 2 hours we're open. If we flip, like we're green, it's a baby green. If we flip and this baby green flips and goes red, guess what? Everyone on TV, again, I'm not on TV, will be screaming, woo, sell off, woo. Everyone's going to be screaming. Traders will be stopping in longs, will lose, who went long this morning and didn't get out, or people will start to kill it like now, because we're starting to drop now, see it? And then you're going to say volatility, volatility, volatility. And if we fall, and if we break today's low, we could fall into the close. And then guess what? We could drop to 615, 612, 610. We could just tank. And again, that's volatility that as a trader, if you understand this whole shebang and this whole chart and understand gaps and what's going on, well, you can make a lot of money if that happens, if you know what to do and when to get in and where to put the stop and everything. And that's, again, where you're taking advantage of the volatility when you see it, rather than becoming a victim of it, which unfortunately a lot of people are. Do you know what I mean? Anyways, let's talk about the system. I'm saying that I trade looking for a high win ratio because I'm trying to put the odds in my favor, because there's no 100%. There's no 100%. You're not going to get it right all the time. Sometimes I take a trade and I lose. So again, it is about looking for to put the odds in your favor where you have more winners than losers, because you're never going to have 100%. And if you need that, then chances are you probably don't have enough money to trade. You do have to have money to trade, whether you're trading on cash or on margin or have a prop account, or if you want to practice on a demo, whatever works for you. You have to be able to take risk. And if you're scared to take a trade, chances are you have too much risk on, okay? So again, think about what I'm saying, because your whole approach to trading, and that includes money too, how you view money, it counts, all right? It's fun to trade, it's fun to be in chat rooms, but it's not fun to lose. It's fun to win, and not only that, it is really fun to win big. Again, Netflix is a fabulous short today, and I called that trade before the open. So again, you've got to get conviction in what you're doing. That's how you're going to be able to move forward. And I'm fine with people taking very small size until they get the conviction. I'd rather see people do that than go hog wild and then be all over the place because they're so stressed and they're trading their P&L. You can't trade your P&L. You got to trade the chart. Do I approach earnings before or after they're announced? I don't take trades into the earnings because how would I know? I'm not friends with Elon Musk. His mother lives in downtown in New York, though. I don't know what the earnings are going to say for Tesla. I don't know what the earnings are going to be for Netflix. I don't know what earnings are going to be. It's a crapshoot. And even if I did know what the earnings were going to say, I wouldn't know how the market would react to it. So sometimes you have good earnings, the stock falls. You have bad earnings, the stock rallies. Actually, that's what happened with NVIDIA. NVIDIA had earnings and they were good earnings. The stock tanked. It gapped up and fell. So you can't buy every gap up. And you can't short every gap up. You can't buy every gap down. You can't short every gap down. That's why I developed the rating system. There would make no sense taking trades into earnings. And there's also an overage of price where they build in you're going to pay more for the cost of the option taking it into the earnings. Now, if you own the stock, you might want to consider either selling some or, before the earnings if you're worried it's going to fall, depending on if you're in a swing trade or something, or if you're in a retirement account and you want to let it ride. I mean, that's different. I'm not buying stocks and holding them forever and ever and ever. Again, I'm not swing trading. I'm actively day trading. I'm doing options. The options have an expiration date. Actually, I'm in trades out till next Friday. I didn't do trades this week for this Friday because of the Fed. I wanted to build a little bit of a cushion. But 2 weeks is probably the longest I'd ever do an option out. Okay? Anyways, institutional money is in charge of the market and stocks at all times. A big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. Netflix is a good example. Who's in charge? The bears. The bears are in charge of Netflix today. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Okay? Even if you think it's not, it is. And this is where people find it tricky, okay? But I'm telling you, this isn't brain surgery. You can figure it out. Becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Learning advanced technical analysis is required to be successful because price is really what counts. And what does this mean? It means reading price action in charts. Comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, and your profits to a higher level of consistency. That's the key. It's the consistency. Because again, there's nothing's 100% where you're never going to lose. You want to have more winners than losers, and you want to be consistent with your sizing, and you want to be consistent with your approach to why you're taking the trade, which is a strategy. That's how you're going to be successful. Of course, you have to have a strategy that works. That goes without saying. That's common sense. But I do this by learning how to read the footprints of institutions trading in the market. And if you can learn how to read that, then again, that's where the momentum's going to just carry you forward. You don't have to do anything. Whether you have 2,000 shares or 3,000 shares or 10,000 shares of Netflix, you wouldn't have moved that stock today. The momentum of the sellers, of the control, which was the big professional traders, they were in control, they dumped it, they carried you to the downside where you would have made money, and that was the momentum. You don't have to do anything but take it. And you got to get the direction right. Again, that's common sense. If you want to win, you got to be in the right direction. If you're not, you're going to lose. And you have to understand how to trade with this side of power. And again, you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader. You can win big trading on this side of power. You can make money in the market if you know what to do, and many people don't, or they get sucked into bad trades or not focusing. So don't do that. It's very easy to get sucked into bad trades, you know. And it's easy to get complacent if you're doing something, like I said, if you went long the market in April with the tariff pause. And again, long story short, you know, if you were doing it, and you were like making money, and then you could get complacent and say, well, I'm just going to buy, you know, they called it the taco trade. You know, every time Trump would say something about tariffs and he'd change his mind. But that isn't a strategy. It never was. Maybe it worked a couple times. But I find people get complacent then. And then that's problematic. And again, you don't want to get complacent with your trading. You have to have something that you can look at each day and analyze and focus on. You don't want to get lazy with your trading, just thinking that buying every dip is going to work, okay? Because that's how you lose. And actually, that's how people can tend to lose more, because they're so confident that what they did 2 months ago worked, that it's going to work now, when the parameters of why that trade worked was a one-shot deal and may not be something that works forever. Do you follow what I'm saying? Again, we had an anomaly this year really in the market with the tariffs. Anyways, what I do is I trade golden gaps. So let's talk about what is a gap. A stock gap, so the opening price today, is different from the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So let's talk about Amazon. Again, this had a bullish gap. Just want to show you. Stock closed here at 4 o'clock when the market closes, 221 and change, boom. Gapped up here around 240-ish, or no, I'm sorry, up here at 250-ish and fell down to 240-ish. So again, if you did this gap on this day as a long, if you bought it, you were down into the close. But if you held it, you were up the next day. Because look, it went up and rallied all the way up to 258. So again, this is a bullish move, actually. Now, let's look at a bearish gap. Stock closed here, gap down, fell. Again, this was mid-November. Stock closed up here at 243, gap down here to 242, fell, dropped down to 237-ish. You could have bought a put, could have done a day trade. If you bought a put, you could have held it. Came all the way down, broke 230. So you could have bought the 240 puts, made $10 in 3 days, in and out, done, boom. But anyways, this is a bearish gap. PLTR, we're talking about this. Again, this has been getting hammered too. Stock closed here, gap down, fell, closed up here, like 184-ish, gap down here to 182-ish, fell off the planet, fell $10. This is back, again, mid-November. Again, this is momentum. This is momentum. This is momentum. See it? Like, this is what you want to trade. Like someone was talking about scalping. You don't want to do this little dinky one. You don't want to do this little dinky bar. You want to do boom, or if you go long, you want to get that. I did not go long here, but you could have. So this is how you're making money, playing these kinds of suckers. You're not making money doing little scalpies. This is too expensive, and you won't make money scalping on options. You won't. You'll just be like, the volatility in options, the price of them, the cost of them, the spreads. It'll be pointless to do it, to be honest with you. So again, if I take an option, I'm holding it. I'd rather see people take one contract and hold it. So anyways, gaps have huge opportunity because they spot power money. And you could have done different directions on different days in that PLTR. But how do I find gaps? They're everywhere. Because I said earlier, things could gap for economic reasons. Could gap with the market. Could gap with the sector. Could gap on earnings. Could gap on news. So it's easy to find gaps, but it is not easy to figure out what ones are going to have big moves and what ones are going to go in the direction of the gap. And that's how I developed the system in the first place, because I did a short. Actually, it was one of my first trades I made a lot of money was Netflix. And it was a short. At that time, this is, again, the stock has split recently, but this was way, way, way a long time ago when the stock was way cheaper than it is now. But I shorted and I said, wow, this is really exciting. This is really fun. I didn't have big size. It was a day trade. And I realized that stocks move faster to the downside than they ever rally. And that's really how I got into shorting. And I also realized I had a niche to short because a lot of day traders prefer to go long. I don't know why. That's not me. Okay. So I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. And you do it in prep in the morning before the open. Because like I said, there is only one thing and one thing only that can move the direction of a stock, and it's money. And it's not a little bit of money, but a lot of money, or what I call power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people, of which there's a lot of in the market, okay? Again, getting back here, just looking quickly at the Tesla. I didn't go long this today. I didn't even see it till after the fact. Maybe I would have gone long it today. I don't know. But for whatever reason, stock closed here, gapped up, okay, opened at 432 and ran up, $11. So the power money people bought Tesla today. Again, it's green right now, but it ran up to the high. Again, if you had done a day trade in this, I would have been out of it by now. But anyways, this, you say, oh, what's happening here? Institutional money is buying it. They're buying the Tesla today. Okay, I don't know, maybe we'll look at this tomorrow, see if it follows through higher tomorrow. But again, people bought it. So gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring, which is important too, because things change. I mean, again, we saw that this year. Things can change in a dime. And that's how you know where the power money will flow to pay you and where to trade it and whether or not you're going to take it or flip it. So I developed a 26-point checklist. I go through this checklist in the morning. I don't have to have a perfect score. I am looking, though, for 20 points or more. If I find 20 points or more, I feel pretty confident that the stock is going to continue in the direction of the gap. The higher the rate of the gap, the better the gap. Again, Netflix is a good example of that. But I'm looking for power money. Let's just think about it. You're like, okay, it makes sense that I want to be with the big money. That's who moves stocks. And it makes sense that you can make more if you get a big move. Again, whether it's up or down. It makes sense, that shorting and that moves to the downside happen much faster than to the upside. again, there's no emergency to go long Tesla. Like if Tesla's going to move higher, you could buy it tomorrow. You could buy it in next week. So again, but if you're in something like Netflix and it's falling and crashing, you're like, holy crap, now what do I do? What do I do? And it's falling, that's more of an emergency. That's where it happens that panic comes in. You understand? So it totally makes sense. It all makes sense when you think about it. Again, going with the direction, got to get the direction right, going with the power of money, which again, I'm doing. I'm reading this all in the chart. So again, just looking, what does selling look like? This. That's what selling looks like. What's PLTR? And again, what does buying look like? Here was Meta. This was before the earnings. Again, this seems like a long time ago too. Look at what's happened to this stock. This was October. The stock was getting bought, was over 750, almost got to 760. It was fabulous, strong, and then it crashed. It crashed. It fell 100 points on the earnings. The stock has never looked the same since. So again, things change, okay? And this is the market. Again, I don't know if anybody of you traded this day. It was a fabulous day to short. That was the 13th. That was back in mid-November. But again, it's easy to press the button if you're trading and you know what to look for, but it's very difficult if you don't. And you don't want to chop yourself up, flipping trades, flipping directions, jumping around, over trading. You've got to have conviction to make money. And more importantly, you have to have conviction to even take size. Everyone wants to make a lot of money, and they think that if they take a big risk, they'll make a lot of money. Not necessarily. If you have a lot of money and you have a big account, you can lose it as easily as you can make money. So again, it's like everyone says, well, if I had more money, I could make more. No, you just lose more if you don't know what to do. So if you have a small account, you can be successful. If you have a medium-sized account, you can be successful. If you have a huge account, you can be successful. You have to know what to do no matter what, because you can lose money either way if you don't know what to do. And you do need conviction in order to make it. And if you want to go with the crowd of people that is buying every dip, it hasn't worked since October. So again, while sometimes it worked, for the most part, buying the dip has not worked since October. So if you think it's going to keep working for the rest of the year, what is your basis for that? Because it worked in April, in May, and June. It has not worked for the last 6 weeks. So you have to have a strategy where you're doing something that makes sense in any market conditions. Going with the crowd of traders is going to develop you having this sense where you feel like the market's against you and the big money's against you. The big money doesn't even know you're there, and quite frankly, it doesn't even care. It has no factor or basis for either decision to buy or sell Netflix or crowd or anything else that happens in the overall market. Economic data does. What President Trump says does. What happens with tariffs does. What Scott Bessent says, the Treasury Secretary, does. So, I mean, again, don't go with the crowd of traders because you're going to end up having more losses and you want to win. You've got to have an edge when you're trading. And again, for me, actually, it's not just the fast trades and the gaps, but it's actually shorting. Because I've been shorting in a bullish market since I really started trading. But when you learn what to do, you can step up your risk. You want to do day trades first, start with that. When you do options first, start with that. But earning power and knowing how to earn it really counts, because then you have the rest of your life to decide how you want to use the system. If you want to do swing trades, that's fine. I'm not doing swing trades, but you can use my system for swing trades. Any questions here before we're almost done? So again, if you want to consistently make a lot of money in the market, the only way that will happen is if, number one, you have a high winning strategy, number two, good money management, number three, a good mentor to follow in the live room, which I try to be every day for people. And again, we trade the morning. Room opens at 9. We start trading at 9:30. We're usually done by 10 o'clock, 10:15. I find the morning is a very important time to trade. It's the most profitable time to trade. Again, if you did Netflix, you could have been done in 5 minutes today. Man, some days are like that. But you can also trade from home. And if you want to learn my system, it's called the Golden Gap course. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to enter and exit the stock on the day. The course teaches price analysis and technical analysis on an advanced level. And again, it teaches one solid strategy to trade gaps effectively by reading the side of power and charts. Again, trade with the side of power. It also teaches you how to read support and resistance to take positions in the right direction, teaches a more proficient and advanced way to read charts focusing on technical analysis and gaps, and teaches how to get conviction in your trading and the market as a source of wealth by trading with the side of power for consistent profit. Because what I'm doing is income generation. It's not buy and hold philosophy. We take the trade, get the move, get out. Take the trade, get the move, get out. We're chunking it, chunk it out, chunk it, chunk it, chunk it out. This is income generation. This isn't, again, buying Netflix today and then holding it till, 10 years from now. That's not what I'm doing. I'm an active trader. I'm a momentum trader. And again, I use conviction to help me trade. A lot of people think, well, I don't want to trade my emotions. No, you use your brain to make the decisions, go through the points, decide your risk. Holding something or exiting something and deciding you want to do one thing as an option or a day trade, you can use your emotions to help you. It definitely helps me trade better. And you can't pretend you don't have emotions as a human being. You're going to fail every time you do that. And then you're just going to get angry at yourself. And then you're going to feel negative. And then you're going to feel down. And then you're going to feel depressed. And you're going to blame yourself. How do you think you're going to feel when you get up in the morning and you're trying to trade and you have only you to do it? You have to do well. You have to be at your best. Your brain has to work right. You need to be as relaxed as possible and focused. If you're down on yourself and criticizing yourself and judging yourself, you're not going to be at your best. Can't try to pretend that you don't have any emotions to trade. You do, but you got to work them in your favor. So empower yourself to trade the market. Remember, education is a gift to yourself because you're investing in yourself to trade. Here's some testimonials. Raj, you can ask John about that or Kate about the recordings. This is from Rick. And again, the last class for the year, can't even believe it, is coming up. It's called the Golden Gap course. It's a full 2-day course on how to strategically find, pick, and place stocks at our professional bearish gaps. Class is online. Could be anywhere in the world and take it. It's December 13th and 14th, 9 to 5. Last class of the year. It's hard to believe. Cost of the class is $6,999. If you're interested or want to sign up, you must email me for forms at melissa@thestockswoosh.com. I'm doing a Cyber Week sale going on through this Friday, which is 12/5, for the bundle. It includes the Golden Gap, the Trends class, the Options class, and all 3 subscriptions you get for free. This ends Friday. And normally the price is $89.99, $1,000 off for Cyber Week, plus all the bonuses of the subscriptions for the Room and the Options newsletter to the end of next year, which is huge. You can start trading this week with us. Some people already have. Cyber Week sale is $79.99, and then the combo, which gets you the Trends and the Options class, all the subscriptions to the end of next year. Normally $79.99. Cyber Week sale is $69.99. I don't have any opinion about that whatsoever at all, Joseph. Any other questions? So anyways, if you're interested, email me and think about what I said. Okay, we can pull up here. Let's see how the Netflix is doing. Looks good. So again, very interesting times we're living in. Very interesting times. 1 week from today, we have the Fed. And trust me when I say that there is no 100% on anything with the Fed. The Fed could not drop rates. They could drop rates a quarter, which I think is already built in. They could drop rates more. The market may not react positive to that. Market could react negative to that. You never know. So be careful. Think about what you're doing. Think about the trades you're taking. Think about your risk. Any other questions here last minute? And have a wonderful holiday. Have a wonderful, wonderful holiday. If you have questions, you can always email me at melissa@thestockswoosh.com. And thanks for having me. You're welcome. Thanks for having me, John and Kate. Have a Merry Christmas.
Thanks.